Great, welcome back. So in this video we're going to talk about the balance sheet again, but we're going to do it with just a little bit more detail so that you can see the information presented differently. Now in this particular video I'm just going to do the assets. As you can see, the size of my board is somewhat limited, but you remember balance sheets are modular. You can do them side by side, assets on the left, liabilities on the right, or you could do like a top-down structure, right? Assets on top, liabilities on the bottom. You can also put owner's equity down on a third level as well if you wish. So when you look at this, we're just going to do assets in this video, but remember, as you're plugging this into your Excel spreadsheet, or hopefully you're not doing it by hand, QuickBooks, whatever, right? You can put this on the left or you can put on the top, but I really want to focus on a lot of detail here first, and then we'll go into the liabilities, and then we'll look at how you can display the owner's equity. But I at least wanted to give you a feel for a very, very simple demonstration of the asset side only. Okay? So, as you're setting up your spreadsheet, remember, there's different ways that you can do it. You can, assuming you're using Excel, you can do like 1 year at a time on a worksheet, or you could use like the same worksheet and have year 1, year 2, year X, right? But the stuff on the left, all these lines should be the same, okay? So let me kind of walk you through it. So you've got your current assets. Again, that's everything that the firm owns. And what I've done is I've drawn these little purple dots to kind of hopefully make it a little easier for those of you who are following along at home. So we've got cash. That's money that you've got, that's your liquid cash. It's in a bank account. You can use it to buy things, you can use it to pay bills, you can use it for whatever that business needs. So let's say I'm looking at, I don't know, something like a lemonade stand or a very simple business. I want to keep the numbers easy. So let's say I've got $500 in cash in the business's bank account. Okay, great. We've also got $200 for accounts receivable, because remember, we're using accrual accounting. So we know, or we think we know, that we have billed for $200. But based on trends, customers informing us, whatever, we also think that about $50 of that $200 that we're owed is not going to get paid. 1 out of 4 is not going to get paid. Not going to pay you. That's a bad place to be. But we're just playing with the numbers here. So that gives us a total of $150 in accounts receivable. So we add that together. And let's say for this, I don't know, lemonade stand or whatever it is, I've got a very simple inventory. I don't know, maybe I've got some pictures and a little table and a sign or something, and that's worth about $50. Okay? And then there's some prepaid expenses. Again, like insurance, rent, anything that I've paid for up front but has not yet necessarily been rendered. That's also $100 there. You add the cash plus your accounts receivable, less allowance for non-payment, plus your inventory, plus your prepaid expenses, and it looks like we've got about $800. Okay? Then you look at your fixed assets. Let's say I'm using my parents' driveway for my lemonade stand, and that's worth about $50. Okay, I paid $50 for the privilege of using my parents' driveway, hypothetically. And let's say the building itself, you're looking at maybe a roof or an overhang that I've used for my lemonade stand. Let's say that's worth about $100. You subtract off the depreciation. Okay. Then you add your equipment. Again, maybe a lemon juicer or something like that, and that's worth about $100. And then the depreciation for that lemon juicer, so it's worth a total of $90. And you add your land, your building, and your equipment together, minus your accumulated depreciation, and that gives me $230. Then what you're going to do is you're going to add the total current assets, $800, and you're going to add your total fixed assets, and that's going to give you $1,030. That's my balance sheet at this time. Now, as you're thinking about it, you also know that the liabilities plus the owner's equity needs to equal this $1,030. Okay. All right. I think that just about wraps it up. And of course, this can be for year 1, and I can do the same thing for year 2. In fact, I could even keep these titles the same, and I can just start populating it for my second year of business. So maybe it's 500 again, maybe it's 300 this year, maybe it's 100 for non-payment, etc. And I can do the same thing again for year 2, all the way out to year X. Okay, I know there's no business, or there's very few businesses that are that simple, but I hope this illustration helps you understand kind of how to use a balance sheet. Great. If you like these videos, give me a thumbs up. Make sure you subscribe and comment down below. Awesome. So in the next video, what we're going to do is we're going to do the same thing we did here, but we're going to do it for our liabilities. Cool. I'll see you in the next video.